Jonathan, I know you've been doing an incredible amount of analysis. What are your thoughts leading into the finish line of that? What are your thoughts now?
Yeah, well, Eugene, you're absolutely right. We've got a lot of ground to cover today. Some incredibly interesting, exciting, and I think very, very important events on the horizon. First and foremost, of course, we have Tuesday, the 5th of November in the United States. This is going to be the most important election of our lifetime. And there is only one election in the world that affects every citizen in every corner of the world. And of course, it is the United States. So now we're in the final furlong. It looks like Trump is gaining momentum just in the last week or so. And in the latest weekly pain report, Eugene, I did say that I believe Trump will win on Tuesday, the 5th of November. If we go back just a month ago, Harris had the momentum following a very successful debate performance when Trump and Harris had their debate about 4 or 5 weeks ago. She got quite a lot of momentum out of that, but it would appear that in the last week, perhaps 10 days, Trump is nudging ahead. The betting markets now have Trump as favorite, and a composite bookmakers odds tracker, which is a composite of 5 bookmakers, has Trump at around 54% chance of winning, with Harris at about 44-45%. Let's just very quickly go through the electoral calculus. We all know that it's all about the electoral college in the United States. It's not about the popular vote. And basically, the winning candidate needs to secure 270 electoral college votes to win. We also know that there are 7 key battleground states that really determine the outcome. Why do we know that? Because, of course, big states like California, we know we can put them in the Democratic column, foregone conclusion. Similarly, states such as New York. However, then if we go across into the battleground states, the most important one of them all is Pennsylvania. I have long believed that the road to the White House runs through the state of Pennsylvania, which has 19 electoral college votes. And just in the last week, it looks like Trump is just nudging his nose ahead of Harris. Even in Michigan and Wisconsin, 2 critical battleground states, 2 or 3 weeks ago, Harris was clearly ahead there. Now Trump is either even with Harris or slightly ahead in some of the polls. And then we look at states like Arizona, where I think Trump is ahead, Georgia, where I think Trump is ahead, North Carolina, which I think Trump is ahead in, Nevada arguably goes Harris. As I said, Wisconsin and Michigan, even Stevens, but I'm now suggesting that Pennsylvania goes Trump. And that leads me to believe that Trump will be the next president of the United States. The other critical issue for us, of course, is the composition of Congress. There, the Republicans are fairly heavily favored to take or regain the Senate. Absolutely critical. The House of Representatives, I think, is too close to call. It's really 50-50. That could go either way. But at the end of the day, we do know that this election in the United States is arguably the tightest race we have ever seen. We also know in just the last week or so, we've had 2 very, very large hurricanes batter the southeast of the United States, hitting Florida, Georgia, and also North Carolina. Now, we're not quite sure how these hurricanes will play out in terms of the politics around those hurricanes. Also, we have, of course, this very, very major escalation and conflict in the Middle East, which we'll touch upon later in our conversation. But suffice to say that these 2 events, the unrest, the war in the Middle East, and also the major hurricanes, can tip the balance in these final 20 days or so. The other factor, which is very much a kind of random factor, is, of course, Elon Musk, who appeared at a rally with Trump in Pennsylvania. and he is clearly, obviously endorsing Donald Trump. Elon Musk has a massive following, particularly in terms of his social media accounts, but also just generally across the United States. And so maybe there's a bit of a Musk factor coming in here in the last 7 or 8 days. But look, the bottom line is I have now decided, after much procrastination, to suggest that Trump will win. If you recall, when it was Trump up against Biden, I said it was a fait accompli. It was a done deal. Trump would easily beat Biden. The Democrats obviously agreed with that, and they replaced Biden with Harris. I initially thought that the momentum was with Harris, and there would be a lot of energy and excitement around Harris as a candidate. That now seems to be dissipating. That kind of momentum and enthusiasm for Harris seems to be falling away, and Trump now seems to be the favored candidate. In terms of what does that mean? At the end of the day, what does that mean for the world financial markets? Neither candidate, neither Trump nor Harris, has expressed any kind of fiscal discipline. At the end of the day, the budget deficits and the huge levels of US government debt will continue to rise regardless of who wins. On balance, however, Trump's policies are arguably more stimulatory in a fiscal sense. And of course, we've got his much beloved tariffs, which are inflationary. So a Trump presidency would be more inflationary and also serve to increase levels of government debt. In terms of equity markets, if we use 2016 as a playbook, what happened when Trump won in November 2016? Well, we know what happened. Of course, smaller companies performed very, very well. Small business, smaller company business investment sentiment improved noticeably because Trump obviously initiated less regulation and lowered taxes, and of course elevated general sentiment in the smaller business sector in the United States. So the small cap index, RTY, the Russell 2000 performed very well, and I anticipate something similar if Trump wins in a few weeks' time.
Thanks, Jonathan. Yeah, it is going to be a close one, but that's interesting analysis. And in terms of what it means for markets, well, and yeah, I guess it's important to understand that whoever wins, we're still going to have a debt issue in the US, and I don't think that's going to come to a head anytime soon anyway. But it'll be interesting to see where that ends up medium and longer term. Let's now turn to US inflation, and we had some figures come out in the last few days. Jonathan, give us your thoughts on that, and also, you know, what you think that means for interest rates and the likelihood of a recession.
Yeah, sure. Look, the CPI numbers in the United States last week were fractionally higher than the kind of consensus expectation. I don't think they were too kind of alarming, but in terms of what the market was anticipating, they were fractionally higher. The bottom line is we obviously had that fairly aggressive 50 basis point cut in the federal funds rate, which I was very lucky. I was actually predicting they would cut by 50. It wasn't consensus at the time. But basically, you've had a couple of economic reports in the United States, which has now made the market think about a recalibration of interest rate expectations for the remainder of the year. It now looks like the market is now pricing just an additional 25 basis points, followed by 25 basis points. And the 50 basis point cut, which the market was pricing 4 weeks ago, has now been taken off the table. And I think that probably feels about right. So obviously the Fed kicked off its easing program with 50 basis points, very aggressive. And then we've seen, non-farm payroll was slightly stronger than anticipated, slightly warmer than anticipated CPI report. And that makes the Fed just take a little bit of a step back. And we've seen a bit of a repricing in terms of expectations for the federal funds rate moving forward. And also a repricing in the bond markets as well. We've seen 2-year note yields in the United States and 10-year note yields rising quite significantly just in the last 3 weeks or so. And that's all part of this recalibration of Fed monetary policy as a consequence, as I said, of the non-farm payroll number and also that slightly warmer than anticipated CPI number. Just a quick caveat, and I've written about this in my reports extensively, and I think it is on board this now. But obviously, we saw that massive downward revision in the jobs numbers published by the Bureau of Labor Statistics for the period of March 23 to March 24. The Bureau of Labor Statistics say that the number of jobs during that period were revised down by 818,000. So when people kind of looked at the most recent non-farm payroll number, which was quite a bit stronger than anticipated, I kind of looked at it and went, do we really know what the number is? Because in 3 months' time or 6 months' time, they're going to revise these numbers. So I'm afraid I'm becoming a little bit cynical about the integrity and the quality and the accuracy of some of the US economic data. And I'll just put that out there, and I'm sure many of you will have seen that there's quite a lot of cynicism and skepticism now about the quality of some of the economic data. The bottom line is the Fed is going to continue to ease rates, but probably not at the same rate the market was anticipating 4 to 5 weeks ago.
And it seems as though, it would take a pretty severe uptick in inflation or jobs for the fact that we're still in an easing cycle to change. So it's just a question of how quickly and how far. So that's going to play out.
Yeah, I mean, the US continues to perform at face value pretty well. And obviously, a lot of this has been driven by the extraordinary government spending. And it's not just at the federal level, it's at the state level. There's really significant fiscal stimulus from state and federal spending that is still flowing through the economy. And I think I still see the economy in the United States weakening as we move forward because Europe is pretty much in recession. China, I mean, I know we're being recorded, but I'll talk to my China friends and ask them what the actual GDP growth rate is in China. And they say at best 2% and probably flat to slightly minus, and yet the official figures are at 5%. So, you can pick whatever number you want with regard to China, but it's certainly not 5%. So the global environment is pretty soft. It's a pretty soft global economic environment. And in the United States, I see a soft environment as well. I think the jobs market is a lot weaker than the official figures tell us. And we know consumer spending now is beginning to falter in the United States. The upper ends obviously continue to spend, happy days, but the lower income and middle income groups are hurting quite significantly. So I think the United States slows down, continues to slow down through the balance of this year and into next. Again, if we get a technical recession, 2 consecutive quarters, I don't know if it's going to be 2 consecutive negative quarters, but I'm officially saying that I see recession in the United States in the next 12 months.